Hey everyone, it is Evan here from the Trade Risk on Friday, November 15th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and finish off looking at some sector analysis. So we're going to jump into our dashboard here. You can see it was a very strong finish to close out the week. Major indices all finishing a little over 0.5% higher today on Friday. 5-day change numbers continuing to stay in pretty strong positive territory. You can see the Russell 2000 is slowing down just a little bit. It's kind of chopping around, going sideways. We'll look at the charts in just a moment. Otherwise, everything here is still in a very strong uptrend above the 1050, 200 SMA right across the board. If we scroll down and take a look at sector performance over the past 5 days, we got healthcare at the top of the list, followed by utilities and technology. A little bit of a rotation from last week's list. On the downside, we have transports, energy, and financials. Pretty interesting mix down there as well. A new bottom three versus last week. In terms of major markets, TLT getting a little bit of a rebound here towards the end of the week. SPY to follow right underneath TLT. And then we had silver. On the downside, natural gas, we had China and emerging markets all underperforming over the past trading week. So let's jump into the charts. Let's try and make some sense of where we are, where we've come from. This is a weekly time frame picture here of the S&P 500 cash market. Sorry, this is the weekly chart for the S&P 500. You can see we are now just finishing our 6-week higher here in a row for the S&P 500. So we've got a nice streak going. I think the NASDAQ's up 7 weeks in a row. So we've definitely got some extension and some persistent bidding here in the market right now. By the way, we closed here on Friday of this week. It was back at or continues to be making new all-time highs. So that means there's no overhead supply above us. This is the highest price that the S&P is traded at. And when we look here a little bit closer, you can see we did kind of open lower this week. We kind of stumbled around a little bit at the beginning of the week. We talked about it in our midweek video. We said, look, a little chop is certainly reasonable, maybe even a little bit of a pullback, perhaps even retest the breakout area here around a 3,027. And of course, a couple of days later, none of that actually took place. Bulls continued to charge higher here, and this trend is extending and continuing to new all-time highs. So no overhead resistance above us. On the downside, let's go to the daily chart. Maybe we can get a little bit of a closer level. Take a look at this chop here that just went on. It was just this sideways but slight grind higher for about 8 trading sessions in here, almost 9 trading sessions, just kind of dancing around this, call it 3,085 area, just a little bit below it, a little bit above it, and then we had the surge here, the pop on Friday, where we sort of gapped up and then just continued to hold up and close strongly. So going forward, looking into next week, if you're a very nimble short-term trader, you're looking at very close levels, you could use the bottom end of this consolidation as some type of warning sign or some type of signal that maybe we have more of a pullback or a little bit of a rug pull. There's some volatility ahead of us. If we start taking out, say, 3,070, maybe that is your line in the sand. If you, again, want to take things a little bit, still pretty short term, but a little bit further, this big breakout level here that we broke out from back in October, which is getting increasingly further away, the 3,027 level, that's the big one there that we want to keep on our radar. If we were suddenly going to start to reverse and start breaking back below there, that would definitely indicate a little bit of a character shift there or something changing. But until and if that happens, this trend is up. S&P 500 remains strong at all-time highs. If we go to the VIX here, we were keeping an eye on this as it was getting close to those 2019 levels. It's almost back to, so this 12.09 is where it closed here on Friday. I believe the lowest close of the year was 12, just 12 even, 12 the figure, or 12.01 maybe. So we're coming in again, we're closing in on the lowest VIX reading of 2019. Again, probably not that much of a surprise given the fact of sort of where the market is right now, breaking out, very low volatility state, pretty much grinding higher. So it does make sense that we have a VIX down here. But again, if you're a contrarian in the short term, if you're looking for some mean reversion or you're looking for a little bit of a rug pull, this is a prime spot of where it could happen. Though, again, remember, it is not necessarily justification alone to take a trade or try and short a runaway market. So all in all, bulls remain intact here, continuing to grind higher. The Russell 2000, we've been keeping a close eye on this one as well, and it is still behaving very well here. You can see the significance of this 160 area here that has been resistance for over a year. It's been struggling. It's been basically all recent attempts around this area have failed. We're back up here now after a 10% move from the bottom end of the range. We're seeing exactly what you would want to see in if you are a bull in the most bullish optimistic scenarios, is that you're not running into resistance and then aggressively pulling back. You're running into resistance after a strong move and then just going sideways here. So really digesting through time. The next step, of course, now is to actually turn this into a continuation pattern, actually get the breakout over 160. That's something we can start to keep an eye on next week. We've now gone sideways for almost 2 weeks here. Let's see if the bulls now have digested enough and if they can continue this higher here, get the breakout underway. That would bode very well for the overall market. Alternatively, if we start to roll over here, if we start to break down, volume picks up, that of course might put the brakes on the rally as a whole for the market into the end of November. So that is the Russell 2000. Finally, last but not least here, the NASDAQ 100. Looks similar to the S&P 500. You basically had almost 2 weeks of sideways consolidation here with a slight tilt to the upside here as it's grinded higher. But we got the nice kind of surge on Friday where we had the gap up, strong finish, new close at all-time highs. And again, life looks pretty good here for the bulls. So all in all, that's the landscape. More of the same, basically same kind of comments we had last Friday. The only difference is we're now about 1% higher in some of these major indices. We're just as extended to the upside, but bulls very firmly in control of this market. So that's the landscape there. Let's get into some other major markets. We'll look at TLT, which did get an impressive kind of reversal, a bid here this week. It's been interesting for the TLT over the past couple of weeks because we have seen the ranges pick up just a little bit. It has been, fairly in play here, the TLT, over the past several months. But, really the past 3 weeks, we looked at this past Friday, the first week in November, this thing was up 1.5% for TLT. That's a pretty good size move. Last week, we had a big down week, down 4%. That's a really big move, historically speaking, for TLT. And now here we are rebounding again, 2% to the upside. So you can see that even though we are kind of still in this downward sloping consolidation, depending on how you want to look at it, short-term downtrend, intermediate term consolidation, what have you, we're still kind of seeing some volatility and some back and forth trading here. If we look at the daily chart, you can see with a couple of gap ups later in the week, volume was light this week, so it wasn't a big heavy volume week, but it does look like bulls making a stand here, kind of reclaiming that September low pivot, getting back above this brief kind of move down here into the 135. So now we'll be interested to see if the bulls can hold on here, put in a higher low, and don't just immediately reverse and give back this pop. So TLT a little bit constructive there in the short term, maybe gathering some steam to the upside, but still has more to prove. If we look at gold next, gold here on the week did finish higher, not as strong as TLT. It was up just a little over 0.5%. You can see it's kind of still in this sideways to lower channel here that it's been in since August of this year. It did get a little bit of pop here towards the end of the week, but still pretty much in that down channel that you see drawn there. Finally, if we look at silver here for metals, you can see again, this was up slightly here on the week, up 1%, but of course 1% to the upside doesn't mean a whole lot or doesn't look that impressive when the prior week was down 7.25%. So XLV here, nice stand, nice little pop, but still again with last week's kind of move to the downside, we're really going to want to have to see this hold this 1585 level. There is support here though, so this is a meaningful spot for silver to hold. We kind of consolidated at this area in August. We sold off to it in September. We just pierced below it recently, and now we're kind of popping back above it. So there is interest here at this general area, so it would be a good spot to hold. Let's see if buyers can step in here again and support this next week. If we move our way to energy next, we look at USO. USO did get a nice finish here to the close out the week, trying to resolve this shorter term consolidation to the upside. Remember, there's a lot of supply, kind of top end of the range here around $12. We went sideways for 2 weeks, starting to try and break through to the upside right now, looking for follow through next week, but short term bulls trying to get some momentum there. In oil, last but not least, is natural gas. Natural gas is coming off a pretty tough start to the week. It was down more than 6% to start off the week. It did reverse some of those losses, but you can see it still took a lot of momentum out of this recent surge here. We finished lower 4.75%. You can see we kind of just went sideways here after Monday's gap down. So natural gas kind of in no man's land here. It just lost a lot of that momentum, that upward trajectory steam that it had. So I think you got to be a little more cautious here. Still a good amount of volume, and there's a tight 4 or 5 day range to work with right here. So for you short-term traders, maybe there's something, but you know, a little bit longer term swing trading basis, don't see too much there for natural gas. Now, if we get into some of the sectors from this week, we take a look at what performed and what didn't. We look here at the top 3 sectors. Top one here was healthcare. Nice push on Friday in particular, 2% to the upside here. And when we zoom out, you can see just a beautiful kind of breakout, really trying to set sail and emerge from this consolidation. Let's go over to a weekly chart. You can see, again, this has gone nowhere since mid-2018. Go to a monthly chart. I think it cleans it up even more. You can see, again, just this nice consolidation with breaking out to new all-time highs, closing at new all-time highs. Life looks good here for healthcare. Short-term extended to the upside, but that's a breakaway trend for now. XLU is also the number 2 now, or not also, but was number 2 here for this week's performance. It was coming off of a rough week, so last week it did sell off. We were down about, which was a pretty big down week for it, 3.65% last week. So we recovered a little over half of that this week. We're closing back in at this $63 area, which is kind of the lower end of the October range. So XLU getting a nice little recovery bid there by bulls. We'll see if they can continue to hold on. Last but not least, or for top 3 anyways, XLK rounding out the 3rd spot. It was up a little over 1%. Again, you can see this is pretty much in runaway mode here. It's melting up. It's extended here in the short term, but again, there's no overhead supply. It's breaking out, working, and continues to do so for technology. On the downside, 3 sectors here that are underperforming. Worst is XLE. This was down 1% on the week. You can see here that it kind of got all the way up to the top end of this channel, and now it's starting to pull back. It does look like a potentially constructive pullback here. It ran exactly into resistance where you would expect it to sort of hesitate. It is hesitating. It is pulling back, and now again you can see a small lift on Friday. We'll see if this can actually make a move next week. If this can start clearing above 61.50, this recent pivot high over here, then suddenly you might get a bigger trend, potential trend change here in XLE. So something to keep an eye on, but still on a relative basis, there's lots of sectors that are working right now a little bit stronger than what you see there. Second worst performer this week was XLF. This was down, but honestly, when we look here at the chart, it covered a tremendous amount of ground throughout the month of October and first couple of weeks in November. It's pulling back a little bit. Looks like a very healthy consolidation, kind of checking back to the slope of what you see here, that trend that kicked off in early October. So XLF looking pretty strong here, looking like it could turn into a continuation pattern. Trend remains higher, something to pay attention to for next week. Last but not least is consumer discretionary. This was in the bottom of the list last week. It is still here. Really, technically it's not in a downtrend. It's not behaving, extremely poorly. It's just not keeping up with the other sectors out there. It is still going sideways. It's still just kind of biding its time and fueling up. But I think XLV, when we look at what this looked like a little bit of a different comparison, but several weeks ago, this was still kind of going sideways, hadn't broken out, still kind of making up its mind. Now, of course, it's off to the races. There are different catalysts, of course. It doesn't have to resolve like this, but let's not fall asleep entirely on XLY. It is nice and coiled in here, so let's pay attention to it for a potential breakout in the coming weeks. So that's what we got. That is the recap for the week of the 15th. Hopefully you had a good week trading. Hopefully you had some long exposure out there because that's what's paying. Otherwise, thanks as always for tuning in and watching these videos every Friday with the weekend market recap. We do them Tuesdays as well, and trade ideas on Wednesdays. You can subscribe to our YouTube channel or follow us on the Trade Risk. Have yourself a great weekend. We'll be back on Tuesday of next week.